JPMorgan's latest retail note echoes that sentiment, saying consumers traded up last quarter. Joining us now is Chris Horvers, senior analyst at JPM, covering broadlines, hardlines, and leisure. Chris, what have you learned?
How you doing, Kelly? Yeah, what we saw from the consumer in the fourth quarter was a very strong spending environment. You had a consumer that actually traded up. Many of my specialty retailers in categories that gained share during COVID has faced negative comps for the past 3 years. We actually saw that flip to positive for many retailers. And the more discretionary retailers, like the Targets of the world, the Best Buys of the world, the Williams-Sonomas of the world, they actually ended up showing strong sequential share performance versus the value channel that actually saw one of its smallest gains in share in the fourth quarter that we've seen for a couple years.
But is it possible that everything changed on Inauguration Day, or as we started to get the fast and furious tariff announcements? Do you know if that has been consistent through the first quarter, or did we have a sudden change of pace?
Yeah, I mean, you definitely had this factor in the fourth quarter of where share of wallet had those headwinds abated, and there was a lot of enthusiasm after the election. The removal of uncertainty. More than half of the country was pretty excited about the outcome, but really since the tariff news got in the headlines, we've seen the data really pull back. I know you mentioned MasterCard a minute ago, but if you look at the Chase spending data, it actually has slowed down on the discretionary side. Some of it was a flu season, some of it was the weather. But even in March, where things are a little bit better on both those fronts, discretionary continues to lag. And in fact, we see it lagging more in states surrounding the Washington, D.C. area, pointing to that uncertainty around DOGE and what's going on in the government having an impact on those states.
So do you I know, like you were saying, if trade up is a thing, that would almost make you a little cautious on some of the names, maybe like a Walmart. Do you position then that way, or do you do the opposite? Which names do you think are best and worst positioned now?
Yeah, I think a couple things there. I think you want to focus on buying quality names you want to hold for a long term at a great price. I think Home Depot stands out on that side, and I would put Walmart as well. Right now, Walmart did gain share in the fourth quarter despite the trade up by the consumer, though not as much as it had earlier in the year. I think right now, I would expect the consumers to trade back down to the value channels. So the Walmarts of the world, the Costcos of the world, as they seek out the best prices, particularly on consumables. So Home Depot, Walmart, and another name that we really like here is Ulta Beauty. Their share performance, they had faced some headwinds because Sephora opened up about 1,000 stores inside Kohl's over the past 3 years. Their share performance also picked up in the fourth quarter. They've got specific initiatives. Yeah. And in stock terms, they guided really late in their earnings cycle. So they got to see all this consumer uncertainty play out, and we think they put out beatable numbers.